Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike York. Today is Wednesday, Hump Day, and it's April 11th. And we just got a couple releases scheduled for today. Again, most of our important stuff will be moved to later this week, but we do got one important one later this morning. But first, we'll start off with the import prices for March. We February had a negative number, and we expected the import prices to go up a little bit for March, and it kind of exceeded expectations up to 1.3%. So another item to look at, the more important one here today, is the Fed Beige Book. So this is kind of the minutes of what the Fed what the conversations are, what's going on with the Fed, with get insight as to what they're thinking and stuff with all the different members. And this will be out 11 o'clock West Coast time this morning. So this will be important. This could be a market mover in itself. So we'll just so now we'll jump over to headline news. And today the stock market's actually up, and a lot of that has to do with Spain and Italian bond yields showing some improvement. And then on top of that, we have some corporations giving out their corporate earnings, like Alcoa came out with a surprising profit, so that kind of helped things along with that move as well. So we'll jump over now to the bond market to see what happened over with the interest rates. We had a bond rollover today, which translates to about a negative 27 basis points. What that means is that they package the old bonds and they start anew at new price, and it doesn't affect pricing at all. So it doesn't have any bearing as to rates going up or down. It just it's basically starting afresh to a new month. So that translates to about negative 27 basis points. That means we're about another 25 basis points lower than what we left off yesterday. So we are at negative, so rates should be a little bit worse today. If you've been listening, we've been saying we're very high right now. I would cash in and basically lock in now. So hopefully you did that. Don't know if we'll reach levels again, but but I definitely kind of stay in this range here. So we do have an opening gap to the worst, but we also haven't closed the other gap, as we can see just past those lines here. We still haven't closed this gap either. So this is helping a little bit, but it hasn't gone down further. At some point, it's going to close that gap as well. All right, so rates are a little bit worse today compared to what we had yesterday. As we saw, we did try to test the ceiling yesterday and pulled back, and so rates are a little bit worse today. It could dramatically improve later today with the Fed Beige Book, or it could dramatically go opposite direction, depending on what we've come across with the Fed Beige Book. So just be prepared. I would definitely look to lock in if you have any floating rates. Interest rates, lock in now before it could potentially get worse. We have more downside risk than we have upside, so that's my recommendation. You guys have a wonderful day, and we will see you tomorrow. Have a good day.